This is our Forex blog for July 26, 2013, and I just want to do a quick blog to end this week, show you what I'm working on. These are our FX Forex signals that I hope to release in the next 2 weeks, and I'm using many of these for my own automated trading systems. So obviously, to be able to sleep at night, I want very high probability trades. There's 36 different patterns that these look for, and when I'm running it myself to test them, I show the actual trade pattern number on here, and that lets me find out which signals are showing up in giving false signals. So you can see number 33 generated at least some movement in this direction this way. Nice win here, an okay win, pretty much a break even. So 33 doesn't need too much work. As I add new trade signals, if I see too many losing trades, I put in more rules to get rid of them. Or in some cases, there's been, out of the 36 or 37 patterns that I've put in here, maybe 3 that I've just found that I couldn't get to be consistently profitable, so I removed them. But this is something that's going to be coming out soon that will help you trade, and especially if you are a brand new trader. The version you get will actually just show the arrow, not give the trade number. That's just for internal purposes for me to identify which signals, maybe don't work very well, need more rules, or need to be yanked. So what I do most days is, in the Forex blog, show you the easiest way to trade, to make money. And in my opinion, that is to use our currency indexes, which allow you to see every individual currency. This is what the euro itself looks like. And it works on any time frame, with a 5-minute chart. If you want to see it on a 30-minute chart, it lets you see, what the euro's been doing, and you can draw trend lines on it. Trend lines now work with the new currency index, and you can, if you see a multiple area where it hits and price breaks through that, that's very likely to, continue in that direction. Just like you can see this trend line here that went up, was hovering right underneath it, broke out, and had an explosive move yesterday. And Fibonacci areas also work very well on the indexes as well. This swing, you can also see the swing from there to the first wave, found the low today. Trend lines work, trend channels work, and especially on longer time frame charts, the trend channels are excellent. Let's get back to how to actually make this intraday. So a few tools that I love on this. One of them is our containment band, because these now are actual charts where we do all the index creating in the back end. You just load star EUR for the euro, star USD for the dollar, and you can see what each individual currency is doing. And you can put on our containment bands, which let you see what the hourly moving average looks like. And you might use that in the 15-minute to see as a filter. Underneath the hourly, and especially when underneath both, the currency is likely to go down. And so if you find a currency that's trending up, you want to be buying it on pullbacks. Let's bring up the dollar, which most people trade the euro against. So the dollar was also trending down. It was underneath its hourly, so was the euro. And so you probably, when the euro had this nice drop here, it made a 50% pullback up, it looks like, right to the 50% level. Look where it went to, the 1.618 fib target. Excellent place to be looking to sell here around 5:30. But the dollar's, also pretty weak. Yes, it might continue up, but the trend is down at that point. It's underneath its hourly, and it's even underneath the 15-minute. You might look at some of the other currencies, and I'm just showing this illustratively to show you how it works. At 5:30, when this one got weak, this one just busted through its hourly, and especially an hour later when it went through its, I'm sorry, the 15-minute moving average here, when it went through the hourly, you have confirmation. So you would look to sell the euro pound. It's that simple. You know, or any other currency where one currency is strong and the other one's weak. Let's take a look at this. At 5:30, the euro is a high probability one to be selling. Breaks down underneath the little wedge here, and a few minutes after that, and has a relatively decent move down. What's so beautiful about these is you can actually see trend lines being broken. Whereas the old currency indexes, you can't. And this went up for multiple hours, and it went and broke the trend line here. That's a trend that's likely to go down. Is it going to only go down 30 minutes, or for the next couple hours? You don't know. But when trend lines are broken after multiple hours up or down, the market typically will reverse. So at 8:30, if you found a currency that was trending up, let's try to find one real quick, maybe the Swiss. Okay, yeah, the Swiss last wave was up. You can see, made a higher high up here, pulled back, went a little bit underneath the hourly, but when it went back above the hourly right here, this one also happened to have just broken down a little bit before that. So you could have looked for a pound Swiss sell. It's not the best trade. Obviously, I'd rather and prefer a much stronger currency than this. Let's take a look at the Australian. This one's kind of pulling back at 8:30, so I wouldn't be doing this one. 8:30, it's been going down for a few hours. Maybe the yen's going up at 8:30. Yeah, the yen is a perfect example. Not only is it above its hourly moving average, it's above its 15-minute moving average. And when this thing broke down, the yen was in a little sideways rectangle pattern and broke out. This is a perfect example of how to use these indexes. You want to sell the pound yen around 8:30. In fact, when one currency is exploding up and the other one's exploding down, you're going to typically make 20 to 50 pips. So here's 8:30. You have a nice little pullback right here, and you made way more than 30 to 50 pips. You made, just in this little short distance here, you made about 30 pips, and then another 50 and another 20. So astronomical big move down. And a lot of times you don't get a pullback on when one currency is strong and another one's weak. You have to kind of sell little flag patterns or rectangle patterns. Once it starts making its move, you really want to kind of wait for a little pullback before you get short, and you have 15, 20 pip profit here. Maybe you lost 8 pips short here, you made 15 pips, and so on. But that's how you use our currency indexes. The yen was strong all day. Let's take a look at the euro also, and especially when it had that little pullback right here. The yen was kind of drifting up and maintaining its strength. It had a little bit of a tiny pullback right there. This is a very high probability trade here, selling the euro yen at 5:30. And again, most of the time when one currency's going down, the other one's going up, you're going to make 20 to 50 pips. In the yen pairs, it typically is more than that. So here's 5:30. You can see it had a little bit of a pullback. You're short right here with your stop above the high. It took it a while to go, and then you can see it fell about 30 pips. You have a little rectangle pattern here, which is beautiful because it's quite a long one, and then that trend continued for about 80 pips. And if you want to scalp it and make 10 or 15 pips, short here, make 20, short here, make 30, you can certainly do that as well. There's so many options when you use the currency index, and you're also focused on the ones most moving. But for new traders, when you use the currency indexes and then you bring up our regular charts and put the signals on there, you can just focus and look for signals when a currency is found using the currency index charts. It's that simple. Even brand new traders that have no idea what they're doing should be able to spot the best currencies to be in and know exactly when to get in, and then you just use a simple trailing stop for exits.